Boy, that weekend flew right by, didn't it? Back to the action, though, here once again. Time to get back to work. The end of the month is right around the corner. It's Tuesday evening, of course. It's May 26, 2020. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me tonight because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you tonight. The charts are all prepped up in the background. As you can see, we got the oil, we got the S&P, and we got that yellow metal gold on the video newsletter for tonight. Before we jump in, though, and put all the plan together for tomorrow's trading session, I want to remind you guys to make sure you subscribe to this YouTube channel. We post a lot of good information every night on this newsletter, so make sure you subscribe. And don't forget, if you have any questions about tonight's video, drop those questions in the comment section below. I'll get those answered after I finish. And as always, if you guys tune in every evening to watch this video, if you rely on this video like I do to get my mind right and get my charts right for tomorrow, hit that thumbs up button for me. Always appreciate you carving out some time with me every evening on this newsletter. But enough of the introduction. Time is ticking back from a holiday break. Hope you guys had a restful break from the markets. But it's time to get back to work, though. Let's kick off the video tonight, checking the calendar for tomorrow. Let's see what's in schedule for tomorrow. Tomorrow, of course, is a Wednesday. It's going to feel like a Tuesday. I might call today Monday night a couple times in the video tonight. It's a Tuesday today. Feels like a Monday. Of course, we'll get over that as we get through the rest of this week. Tomorrow, of course, is the next day in the list here. Let's put it that way. Right? Tomorrow, Wednesday, May 27th. Now, the most important factor in this week is it's the end of the month. We have the end of the month, the last day, not the official last day, but last trading day is on Friday. So anytime we have the end of the month, we always expect to see increased volatility. Increased volatility definitely expected into the rest of the week this week. Now, we also had a Monday holiday. And anytime we have a Monday holiday, it always leaves us open to what I call the snapback. And it's tough to describe what this is. Basically, the markets were open on Monday, as you you might have realized that, right? The markets were open, but very low volume, right? There's only a few days every year where the markets are actually closed, right? So, of course, half day on Friday. We, of course, had a holiday on Monday. Well, as you probably noticed, we had some big moves on the oil and the S&P on Monday, and a lot of times by Wednesday or Thursday of that week, we go back to those original areas. I call it the snapback, and we'll talk more about that tonight on the charts as we go into the S&P. To be specific, does look like it may be ripe for a snapback, and we'll talk more about that as we go. But anytime Monday is a holiday and we get a real strong jump, right, Monday, Tuesday into Wednesday, I'm always thinking there's probably a lot of traders out there that were hanging out on the boat on Monday. They weren't watching the charts. They came in this morning. They thought, I'm not going to buy way up here. And they're probably waiting for that snapback. We'll talk more details on that. But those are the first two things I noticed when I get to my desk this morning is, first of all, the holiday on Monday tells me be aware of the potential snapback. And then with the end of the month, we know volatility is definitely going to be on our radar here this week. So knowing all of those kind of intangibles, what do we know is coming down the pipe here for tomorrow? There's not a lot on the schedule here tomorrow, is there? No, there really isn't. And so since we don't have a lot, there's really nothing to anchor ourselves into tomorrow. You'll notice tomorrow the inventory report. We usually get that weekly inventory report for oil on Wednesdays. That gets pushed back till Thursday. So there's no crude oil inventories on Wednesdays. Again, if that Monday is a holiday, right? Everything gets pushed back 24 hours. I actually like it better that way because it puts the inventory report at 11 o'clock on Thursday. So we get a full session tomorrow. Tomorrow and Thursday will likely be the best sessions of the week. Today was a pretty good day as well, right? Not to discount how great the price action was today. But looking at tomorrow, there's no major news here tomorrow. And so we have to think that markets are going to try to latch on to something. Now, lately, we've been seeing a lot of the best setups between 9:30 and 11 o'clock in the morning, the U.S. session. So that's something you want to be at your desk for tomorrow. We have a lot going on, though, right now, right? We saw a big push higher on the kind of optimism of the reopening of the economy, not in the U.S., but I'm sure in your neck of the woods as well. We're still still locked down here in Los Angeles, but I'll tell you, you wouldn't know it if you went around town over the weekend. The tensions are building between the U.S. and China, right? The U.S. President Trump has said some very stern language, headed towards China. China has reciprocated. We're kind of waiting to see if that's going to snowball, right? That is something we're watching here for tomorrow and the rest of this week. We're also know we're probably going to get one more headline at some point regarding some more stimulus. We've heard about back-to-work bonuses now. We've heard about a tax cut. We've heard about a payroll tax waiver for small businesses. A lot of rumors going on about more stimulus packages here in the U.S. That is something I think most people are really on the edge of their seat for. If we do see one big sensational headline out of that, that could really get these markets ripping. And then, boy, I'll tell you, we heard today about the kind of the realistic timeline for some of these vaccines. I mean, let's be honest. If you thought we're going to get a vaccine this year, there's still no vaccine for the common flu. So it is a little bit unrealistic to think these vaccines will be out this year. But the market shrugged that off with no problem. It was a pretty bullish clue here we saw this morning. Though these are all some of the intangibles, right? The reopening of the economy, will that continue to be a boon for these markets? How much will the U.S.-China relationship, how much will that weigh on these markets? Only 6 months ago, if there was any bit of a bicker back and forth between these two huge economies, the markets tumbled, and we clearly aren't seeing that right now. Will that change over the next 24, 48 hours? Will we hear about the stimulus package, and will we hear some more updates on the delay on the rolling out of the vaccines? I don't think that surprised anybody in all reality. So a lot on these. A lot to look forward to tomorrow. Will we get that snapback from Monday? Right, no major news, of course. 9:30 to 11 o'clock has been where the best setups have been coming lately. Will it happen again tomorrow? And more volatility as we go into the end of the month of May. Now, don't forget, we're going to open the charts here in a moment. We're going to put the plan together for tomorrow. Tomorrow morning and every morning, 8 o'clock Eastern Time, Monday through Friday, we'll get together in our trade room. I'd love to have you there with me trading right along with us here as a client. I'll put all the membership information for you so you can get registered and come join me tomorrow morning at the opening bell and trade it with me. I'll put all the info for you guys in the description below this video. If you're on the blog right now, put a big red button for you right below this video tonight on the trading blog. So get registered. That way you don't miss the great setups tomorrow morning in the trade room. Speaking of which, let's identify the best setups here for tomorrow. We got some oil, I got some S&P, and of course we got some gold on the radar here right now. We are starting to watch for rollover on gold, so I'll keep you posted on that as we see more information on gold. And of course, let's jump in first though over to the oil market here today. What do we know about oil? There's a couple key components here. The first most important thing to understand on oil right now, it's a bull market into a trading range. Anytime I see a trading range, I want to buy low, I want to sell high, and I want to fade the breakout. Stay away from the middle, buy low, sell high, and focus on failures. Now, whenever I have a trading range, I look for a bias. In this case, there's a clear bullish bias on this range. So really the goal is to buy underneath the range. Again, buying low underneath a range, or the next kind of big piece of this puzzle is you'll notice how I've got this drawn up as an expanding triangle. Knowing that we're bullish and knowing that the fundamentals of the economy getting back on track and of course the increased demand on oil consumption, it would be easy to think this market could keep pushing higher here and go running up to that retest at $34.81, $35 big round number, but more importantly, all the way up right to the high of that triangle. So, really at this point, we know we're bullish, we know we're range bound. I'd like to be a buyer below the range. If we don't get that pullback and we sit sideways, I've really got to be careful inside this no trade zone as I've got it marked. And do we make that run higher, right? Do we see that nice strong push higher here? That is definitely going to be on my radar here as well. So breaking this down right now, my favorite pattern when I'm trying trying to buy underneath a trading range is a failure pattern. I like to wait for the market to get underneath the range. I like to wait for those breakout sellers to commit off a pullback, and once they do, I'll look to buy into those stop losses. You can see a very good example, right, of a similar setup underneath the range here. We go down, the bears try to sell. We know exactly what type of day it is. It's not a trending environment. It's a range market. I want to buy underneath that range into those stop losses of those sellers. So that's the basic idea here on this chart, right? We know we've got some levels of interest here overhead. Again, the top of that triangle being the key here. There's also a measured move on there as well. Now, how do I buy this market right now? If the market pulls back here for us, right? Whenever I have a range, I want to buy underneath the range, as I mentioned. There's a couple options here right now. Now, one option would be a nice, easy pullback below that low. We get that moving average coming over. The bears try to sell off the moving average. Now I know exactly where those stops are, and now I know an easy way to get long for what is usually a pretty easy run back up into that range. This is a seller failure pattern. Now, I talked about the snapback, as I mentioned earlier in the video, right? The snapback. Remember, we could see these bears. This is the 25th right there, right? So that is the Monday low right there. Now imagine you came into the market today and you saw this big move going higher, right? And you probably thought, man, I don't want to buy way up here. But if it came all the way back to Monday's low, I would definitely want to buy it there, right? If you could get me in back at the lows while I was hanging out barbecuing during Memorial Day weekend, right? If I could get back in there, now that is a bargain I wouldn't be able to pass up. And that's exactly what the snapback is all about, right? While everybody's partying on the weekend, right? On the holiday weekend, everybody's hanging out, right? This market ran higher. We come in this morning though, wait a second. I'm going to buy way up here. But if it comes all the way back to where it was at the beginning of this holiday, I would definitely be interested in buying there. So knowing that, I've still got this pendulum swing hanging out down here, this major area of support. You could easily add one more area down there and say this is really where the gold is. Now, if we go all the way down into that area, though, it's not going to be a very bull market any longer, is it? And so to get in at that point now, I'm looking for really two types of patterns. One would be a trap, a seller trap, a two with a trap low, right? That is one. I call these nested failure patterns. They're failure patterns, but right, they're a little bit more reliable when you get these big bear moves down, right? Again, if I just get a lazy pullback here, I'm not worried about bears being too strong. I can buy right into those stop losses pretty easily from there. But if it really shoots lower now I'm thinking the bears have to really try twice before I can be a buyer on this. And I'm thinking one of those nesteds will be a very short-term one and two with a trap or at the bottom, right, and a move back up. That'd be one try for the bears, two try for the bears, and I'm buying up from there. Another very common setup we've seen lately on this would be kind of a drawn out, right? One, two, and I always like to grab a trend line and try to find my way in off of that trend line, right? These are, of course, variations of this failure pattern, as I keep mentioning, right? We're trying to buy off of that second try. So if it really makes that move lower, look for the bears to try twice. If it kind of just pulls back a little low, I'm looking to buy into those stops of those sellers. Now remember, as they go lower, if these bears, if they hold that pullback and they run, that's a reversal. And at that point now, the bears are probably trying to go back and hit that low from Sunday evening at 32.48, right? That's the objective if the bears can take control. If the bears can actually take control with what I call a 1, 2, 3 reversal, and it would also be a 1, 2, 3 breakout, now what I'll do is I'll mark up that low, I'm going to mark up the hidden channel high, and now I've got a good idea of where I want to be selling short on the way down to retesting that 32.48 low. So remember, I'm not going to try to sell sell that first pullback. I'm trying to buy into the failure of that first pullback. But if they can actually hold it, then I like the idea of selling off the top of that hidden channel. Now, that'll cover me on the pullback. If the market goes sideways here, what do? We sit on hands, right? If it goes sideways, we're sitting on hands. Get underneath the range, seller failure, buy it back up, all right? So stay out of the middle of that range. The big thing, though, is do we run higher? There are two patterns I'm watching for. I know where the market wants to go. It wants to get up into these highs, right? That's for sure. That 34.81, but I've got reason to believe, though, this thing could really carry if the momentum, right? If the good times keep rolling here with the reopening of the economy. And it does seem like, even though the U.S. and China appear to be at each other's throats right now about many things, it doesn't seem like that is impacting the overall sentiment of the market. We'll see if that changes for tomorrow. Two patterns I'm watching for. One would be a two-try trap. That'd be a strong breakup, right? Strong breakup, shallow pullback, higher high. Remember, this is a very important pattern. Strong move up, shallow pullback. The strong move, the shallow pullback, and the higher high tell me I've got buyers willing to get aggressive right below that low, right? So strong move up, shallow pullback, higher high. We call those what? Two-try trap patterns. Keep in mind, I always try to incorporate some type of channel, some type of support level on there. It'd be a great spot to get long. And again, my target on this stuff is up at the top of that triangle, up at the measured move. Or maybe we don't see that rip going higher. Maybe it just jumps up. I don't want to buy the pullback here because, again, we've got resistance up here. But if it pulls back and it can hold and really go, perfect. Now we have a 1, 2, 3 breakout. I can mark up that high. I can mark up that low now. That gives me my channel. And now as long as I can get into this pullback before we get up into these highs up here, I'm really looking good for a rally going higher. Now, keep in mind, too, if we do run up into that area of resistance, be aware if we stall out here and buyers try once, pull back, buyers try twice, okay, twice, we'll call it twice. We can call it once we want, right? We'll look for what we call a crown reversal pattern. Crown reversal patterns are great, but these are going to be patience, right? You got to stay patient. What's going to happen is if we go up and we pull back and we go, now it's a breakout, find the channel, right, et cetera, et cetera. Or do we really blow right through it? There's no question about the breakout at that point. But again, if we go up to that high, retest the high, and all of a sudden things start smelling fishy up here, buyers try once, they fail, lower low, buyers try twice. Now we can start looking for those crown reversal patterns. And again, watch closely how I draw this pattern because it's a very reliable pattern, but you've got to make sure you have all the boxes ticked. First of all, it's definitely going to be at a major turning point, right? Second, I want to see buyers trying twice. Those are lower lows on the two tries. And the ideal is a trap above that prior swing, not above the prior high though, right? It's kind of the in-between area there. A double top will work, but traps are ideal. That'd be a great spot there to get short if we don't see that follow through going higher here. So now at this point, I think we're pretty well covered here on the oil. The key to a range is failures, right? Buying with a seller failure pattern. Again, we see a lot of those patterns in our trade room every day. We'll trade them together tomorrow at 8 o'clock Eastern time. If you're not with me though tomorrow, the next best thing, if you're not joining the trade room, is to grab our free trading classes. I'll put a link for you here in the upper right hand corner. Grab that link in the upper right hand corner. Get registered as a member of our free trading classes. You'll learn my 4 favorite setups, my 3-step strategy, the same strategy we use every day in our trade room, and I'll send you hundreds of examples of how we apply our favorite strategy to our favorite futures markets. So make sure you grab that free course. It's linked up there in the upper right hand corner. Like I mentioned earlier, I'll put all the free course information, all the membership information for you down the description of this YouTube video. If you're on the blog right now, it's right below the video tonight on the blog at Sideways Markets. All right, stay out of that middle tomorrow. And remember, there's no news for oil tomorrow, right? No inventory news tomorrow on the oil. Let's keep this party going here. How about some S&P? Boy, the S&P is a big candidate for the snap back, as I mentioned earlier. What do we know about the S&P? We know the market is, for the most part here, right? It's a bull market, and there's your range. It's bullish into a range. And I think it's pretty easy to see the buyers, right, did a pretty good job today at waiting for that seller failure and buying underneath the range. You can see they've got that triangle on there, right? And so once you find that triangle, you can see exactly what I'm talking about on oil, right? Looking for those seller failures, right? And buying back up. Now, with that said, there's one very big difference between the S&P and the oil, and that is, of course, this big move down. Now, this big move down is what gets me thinking this might be a candidate for a snapback. Now, remember, what is a snapback? If you go back, imagine for a moment you get to your desk on Tuesday morning, right? You still got a little bit of margarita in your system, right, from Sunday or Monday. I know we don't do that as professionals, right? Very serious. But maybe you did, right? You get back to your desk on Tuesday morning, the first thing you think of is I'm not buying way up here. Are you crazy? All right, above 3,000, big round number. Why would I buy up here? And you go back and look at your chart and you go, well, wait a second though. If we came back here, okay, I'd be good there. If we came back all the way down here, now, yeah, that would be something I could be interested in. You could twist my arm enough to get me in on that price. In other words, we look at the chart here, we realize, you know what? They had a big jump on this. Whoever was watching charts, whoever was trading on Monday's holiday, right? Whoever wasn't hanging out with family and friends, right? They were putting their orders in, catching that bid on the way higher. For the rest of us out here, right, who had something better to do on Monday, we come back in and we see, wait a second, all the fun was down here. And that's what leads me to believe now with this big push down, they might be trying to hunt for that snapback. And I'm thinking either go down to that, again, I would think probably down to this area here, right? And then back up. Or these bears, they may give this thing a licking and we may go all the way back down, right, to really get the snap back. So this is a very interesting chart here on the S&P. I think we're too bullish right now to want to be a seller, but I do think though this strong move down, you cannot ignore that, right? You can't ignore that strong move down. The first that stands out, of course, is the fact that if you look at this triangle, and we talk about the triangle on oil, right? So look at the rotation. Back and forth, back and forth, back and forth, and then look what happened now. Look, they failed rotation. Failed it there. They failed it there. This should have kept on rotating back and forth here, like oil has done. So it's very obvious there, yes, we're bullish, but there appears to be something holding this market back right now. Will that something deteriorate overnight? Will we get some fresh news right overnight out of Asia? Your guess is as good as mine, but right now, though, it very much is a bull market into a range with a certain heaviness that we can feel in this. Now, is this heaviness because of the big round number? Is this heaviness because of what I call the snapback? I couldn't tell you, right? Nobody really knows. But we can definitely see it on the chart. So I want to be a buyer, right? But that strong move down tells me I really should anticipate another round of sellers. And so whenever I see a situation like this, I think, okay, I want to be a buyer, but I have to anticipate. Take off the buyer cap and put on the sell cap, right? What would I do if I wanted to be a seller? Well, if I was going to be a seller on this, which again, it's not a breakout yet, right? It's not a 1, 2, 3 breakout yet. Okay, it's a strong move down, but they haven't held the pullback and they haven't jumped through yet. It's not a full reversal yet, just a strong move down because they went back into the range, right? So I mean, run lower. Okay, anyways, we know we're still bullish. We're just a little bit too bearish to be too aggressive. So think about this. What if I marked up that low and made my channel here? I'll bet you're going to see a lot of bears, right, trying to get short off that high. And I'm going to let them. If they want to try to get short off that, prove it to me, bears. Prove it to me that you can actually hold this market and run it lower. Because if you can't, there's a good chance this thing runs right back up into that range again. So that's kind of the goal here right now. The goal is I want to be a buyer, but I want to anticipate, we're probably going to see some bears try to kind of spoil the fun here. So the most important thing right now is as we go back into this kind of this hidden channel I got drawn up, we know where the buy zones are, right, underneath the range, and of course my sell zone up overhead. I don't want to trade inside the range, right? We covered that on oil already. Buy low, sell high, and avoid the middle. Now, I've got a really strong move down here. We just talked about this on oil. We know it's a range. We know that range is a magnet. That's not how you spell magnet. That's how you spell magnet, right? We know that range is a magnet. So we want to use that magnet like a magnet would be, right, to draw this price back higher here. But I've got these bears in my way, right? What was the pattern we just talked about on oil? It was called a nested pattern, right? Basically, I need these bears to try once, try twice, and buy from there, right? Just because of the overall momentum that we're seeing here, right? A lot of bearish momentum here. So one try for the bears, two try for the bears. Ideally, it's going to be a trap, right? Ideally, it's a trap or at least a double bottom. And you'll notice it's right off of that same trend line again. I really like this area a lot. That will be a great nested with a trap entry to make sure I'm not not buying too aggressively here. But again, I do want to get off some level of support here to buy going back up into that trading range. Now, knowing that, another option we could use here would be if it starts to slow down. I mentioned earlier, right? So we come in now, one round of bears come in. We go higher now. Now I'm drawing that trend line up. Second round of bears now come in, right? Now we're talking. These are additional opportunities we can look for as we're going. Maybe we don't get the original entry we want there. We wait for the bears, try once, try twice there. So keep on looking for the one try, the two try, find that level of support. That's the key. Find that level of support, whether it be a trend line, whether it be a swing line with that prior one. But these are the sweet spots here, absorbing the momentum, buying now, going back up into that trading range. That's my ultimate goal here for the S&P as we go higher. Now, what if we don't, right? What if we rip higher here and run higher? If we just rip going higher, start looking for traps, right? Start looking for traps. Traps are going to be key if the market starts racing higher here, right? So if we don't get the 1-2 back here where I want it, if it starts ripping higher here, I don't want to trade inside the range. I'm looking for traps, right? As we go higher, because I don't want to trade inside that range. I want to still look for a buy opportunity here, but I don't want to buy too close to that range here. Now, remember, if they go lower here, this becomes, right? If they go lower, if they hold this and we run, this now becomes a bear market now. And now we go out, we grab that low, we grab that high, we'll readjust this channel, and we're selling off the high of that channel, right? Makes sense, right? So this channel might get blown out of the water here. I don't know where they're going to hold the pullback if they do hold the pullback. But strong move down, though. If they hold that pullback and run now we're on, right? Now we know mark that low, we know mark that high, right? And we're looking to short, right, off of that high here. At that point, where's my target? Target is pretty easy from there, right? Target's all the way back down to that 29.53 or right 29.60 area as we go. All right, so we know what the plan is if the market runs lower, right? We know the plan here we're trying to find for the buyers going higher here. If we do end up back inside that range, remember, stay patient. We're not chasing after it. What do we do underneath the range? We wait for the pullback. We wait for that seller failure. Yep. And we buy going back up again. So if it just happens to shoot back up into the range here, it's a simple seller failure below the low of that range, snapping back higher here. Now, we may also see this thing really rip, right? This could easily really rip. It could run up. It could hold the pullback. And it could take off to the upside here. If we get enough momentum going higher here, you know where they're trying to go, right? They want to get back up to retest that high. I don't want to chase after it, though. Follow that, right? Follow that lead. Find that trend off the high. Mark up that hidden channel off the low. And now we know we're trying to be a buyer here now, right, off of those lows. Again, if this momentum really starts to cook, right, another pattern would be strong move up, shallow pullback, higher high, and trap low. Now, this is not drawn to scale here, but this is a pattern I'm looking for if the market really rips higher. It might be above that high here as well. So keep your eyes open if the market really races higher here on the S&P. So now we know a pretty good plan on the E-mini. We know how to trade it if it rolls over and goes lower. We know to keep our eyes open for these kind of hidden channels off the high right now, anticipating that bears are coming in and trying to cramp our style here, right? Little trap low out there, right? Or do we race higher, 1, 2, 3, grab that new channel and get in on the way back up to retest those highs? I'm very excited about tomorrow's trading session. Hope I see you guys with us tomorrow in the trade room at 8 o'clock Eastern time. Let's wrap this thing up here tonight now over on the gold. Looking at the yellow metal here tonight on the newsletter, wrapping up on the gold. What do we know about gold? We know we're 3 legs down. Right? We know we had a strong move, almost 3 legs down. And usually when a market goes 3 legs down like this, it usually starts to get a bit exhausted and it starts to go sideways. That's the first thing I notice on this chart is that we're definitely bearish, no doubt about that, but we're pretty low in the chart now. 1 leg, 2 leg, and you could easily say, right, there is your 3rd leg down right there. So knowing that we are potentially 3 legs down, I always start looking for a range whenever I see a market 3 legs down here. So we may end up tomorrow instead of a bear trend, obviously, but into a trading range. So if we do go sideways on this, what's the plan for a range? Buy low, sell high. If we do go sideways, my plan is always the same. I'll put this little kind of a faux range there, right? Let's say we do go down and we start going sideways now inside of that range here. There's a couple options, right? To be a seller, what I always do is wait for the price to pop up, wait for the buyers to buy the pullback, and then I can sell into those stop losses, right? So buyers, of course, now come out. They try to buy that pullback. This, again, is assuming now we get that range. If that range starts taking us sideways now, I've got this trend line coming down overhead. That wouldn't be a bad spot. That wouldn't be a bad spot to combine that trend line along with again, it's a buyer failure pattern up above the top of that trading range. That's a beautiful potential setup here for us as we go. Keep in mind, too, if this was to really jump, right? Really jump off of that low. It's not a reversal yet, is it? No, it's not a reversal. Reversal to hold the pullback and go. But if we were to go down and sit here going sideways a little bit, and then all of a sudden the market gets spooked or something, right? And it really runs up, what do we do then? We wait for the nested, right? Wait for the 1, wait for the 2, and then we can sell back down. Why do we do it that way? Because momentum, right? Momentum is way too strong. It's still very bearish, right? We haven't reversed. What would a reversal look like? Right? A reversal would be, of course, and again, we're looking for the 1, the 2, and we're selling it back down. A reversal, of course, would hold that pullback, right? A reversal would hold the pullback and go. Once we get that 1, 2, 3 reversal, okay, now I'm convinced. But I'm not going to try to buy that first pullback. That's a suicide mission, right? On a buy side, I'll mark up that high. I'll mark up that low, I'll find that new channel, and we'll buy off the pullback, right, of that new hidden channel. These are called 1, 2, 3 breakouts or 1, 2, 3 reversals into hidden channel pullback. So just some food for thought there if we start going sideways. Now, it's also important to understand where you are on gold as well, because if you look left here, you'll see that gold, right? Look left here, you'll see that gold is right around some pretty hefty lows here, right? This is not a great spot to be selling as the market goes lower. That 1692 area is a pretty obvious level of support. So I would expect that if we do go sideways here on gold, like it does look like there's potential, if we do go sideways here and if the market does confirm that sideways range, then I can start thinking about a crown reversal. I can buy underneath that range. Now, what's the best way for me to buy in a very bear market? Very slowly, very carefully. Now remember, the first thing is it's got to go sideways first. It's the only way I can feel comfortable being a buyer in this market, at least in this example. I'll wait for the price to run lower. And at this point now, there's a couple patterns I'm looking for, right? One would be that 1, that 2, right? Get that trend line coming over. That wouldn't be a bad, right? Nested failure. Bears try once, bears try twice, right? We're buying off of it now. But again, we're not buying too aggressively though, because of course we're so bearish. Another pattern I'd like to look for is that crown reversal, right? The 1 try for the bears, the 2 try for the bears. This is always my favorite one. This is one of the most reliable reversal patterns. That will always happen a little bit faster than the previous example, right? This will be a little bit faster, right? Not too fast, but it'll probably take about 5-10 minutes. One try for the bears, two try for the bears, trap low, and back up as we go from there. So as you can see, there's plenty of options for the buy side, but again, they've got to get into that range first, though. We have to see that range really holding strong there. That'll be a big important part of this for tomorrow. Now, what if we don't go sideways, right? Let's be honest here, right? What if we don't go sideways? What if this market, well, first of all, what if it pulls back? If we get a pullback, my concern is we're very low on this chart. And so as we pull back, if it's a shallow pullback off the top of this channel, my concern is being too low. That's my concern. I like the idea of being a seller, but after being 3 legs down, I start worrying that we may not have as many bears down here as we'd like. And so my favorite way to really to get a more reliable entry short when I'm low on the chart is a traps, right? So 1, 2, and trap above that high. This will be a really nice setup if we can get it before we get that measured move. You know, again, I don't want to be too aggressive as just to sell a buyer failure. A buyer failure may be the case here. It's just very low in the chart, right? So a buyer failure above the top of that moving average, right? Profit taking, price goes up, moving average comes over, buyers try to buy the pullback now, and I sell into stop losses. I don't feel like that's going to be the most reliable setup for me in the short term. What I'd like to see is them try once, pull back, try twice, and get that trap. Because that trap will help me avoid the problem of selling low, right? It'll allow me to rope in the buyers, 1 and 2. But most importantly, though, it allows me to get that little cherry on top before we run down to finish off that triple measured move. This whole sequence here is really because of where we are, right? It's because we're 3 legs down. It's not because we're bearish, but it's because of location, right? Where we are in the chart, where we are in the bigger picture. We're 3 legs down on the day, but we're also right at those lows of the bigger picture there as well. So a little nested failure with a trap pattern, that'd be a great spot to get short there for tomorrow. And then, of course, as we go higher here, if we do go higher here, I really like this area right here. As I mentioned earlier, I've got this prior swing low, that trend line coming down. Man, oh man, that's a very tasty area there, around that 715 area there. Now, as we pull back on that, this is a spot where I could get into a failure, right? This is a spot where if we do pull back up into that buy zone, now moving average comes over. Now buyers think they're in the clear on this. They're buying the pullback here on this. I'm no longer worried about being too low down here, and now I can aggressively be a seller into the stop losses of those buyers, right? And then, of course, on the moving average, grab that pullback to finish the move back down to retest that low. Does that make sense? Right? So on this one, I'm not so worried about those cramped spaces like I was on the shallow pullback. I got a lot more resistance up there. There may even be another variation, right, of that channel coming down too. So that's really a good sweet spot, right, for those sellers. Now, I think the big thing is, can they hold that pullback? Because after all, if they do get that strong move up, if they hold that pullback off the moving average jump from there, that's a reversal, right? I don't care what direction I trade in, neither should you, but I'm not going to try to buy that first pullback, right? We'll look for that to hold that pullback, find that new channel, and then it's on, right? Then we know the buyers have it, and we know the objective is to go back up and retest that 1737 even area. Again, I have no interest in buying that first pullback because it's not a bull market. But once it turns bullish, then I can definitely rely on that momentum. I can rely on more buyers to come in and keep this thing running back to that 37.2. I think the hardest part tomorrow is going to be if the market grinds lower. You know what I mean? If it grinds lower, we're still looking for the shallow pullback with a trap, right? If it grinds lower, I'm still looking for a pullback with a trap. Okay, same basic idea as before. If it grinds lower, I'd like to see a bigger pullback off the high, a buyer off the low, a buyer failure into a pullback off the moving average, right? That sequence, we see that a lot in our trade room, right? That buyer failure into that bearish pullback. So if we do keep grinding lower, right? I don't want to sell it down there, and I have a hard time picking a bottom. And remember, we're not trying to be a buyer on this unless we see it go sideways or reverse. right? If it goes sideways, then I can start to plan my entry going long because I know I've got balance in that range. Or if we do get that 1, 2, 3 reversal, then I know I've got momentum on my side. That's a different story. If the market keeps on running lower here, I have no business in being a buyer at this point unless they go sideways or unless they reverse. But not a lot has changed. I still want to go out, find my channels here, right? I still want to keep an eye on those channels. I still want to get up off of that low. And again, just be aware of your surroundings, right? If it's a shallow pullback, I'm looking for traps. If it is a deeper pullback now, I'm looking for those buyer failures into seller pullbacks and back down to retest that low. Now, guys and gals, don't forget, you can learn all of these setups inside of that free trading course. Linked up in the upper right-hand corner. I'll put all the membership information for you guys in the description of this YouTube video. Don't forget to post questions if you have any questions about anything we talk about tonight on the video. But most importantly, though, make sure you set your alarm bright and early tomorrow and get into the trade room tomorrow morning and come trade it with me every morning, Monday through Friday, excluding holidays, right, like yesterday. Hope you guys had a great holiday, by the way. But Monday through Friday, 8 o'clock Eastern Time in the trade room. All the registration information is in the description of the YouTube video. Don't be afraid to call me this evening, right? Almost end of the month. I want you guys to get the best access into the end of the month. We should have some great volatility for tomorrow's trading session. So don't be afraid to call me in the office here this afternoon. I'll be here the rest of the day. It's still here early in Los Angeles. Don't be afraid to use that live support tool on the right-hand side of the website. And as always, if membership isn't quite right for you right now, at the very least, grab the free courses as part of our free trial, learn the strategy, come back and get the most out of our time together every evening on this video newsletter. Everything else, though, hope you guys had a great weekend out there. It feels great to be back here. We are almost finished with the month of May. We're going to kick some butt in the trade room tomorrow morning at the opening bell. I hope I see you there with me. If not, don't forget, come back and see us again on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? Right? And get over that hangover, right? See you guys tomorrow morning. Adios, amigos. Bye-bye for now.